Hey everyone, Todd here. In this video, I'm going to talk about the Grayscale Bitcoin Trust, which is one of the more common, popular, and frankly, one of the only ways to purchase Bitcoin or exposure to Bitcoin in a brokerage account or retirement account. And so this trades under the ticker GBTC, so Grayscale Bitcoin Trust, or Grayscale, and then BTC is the ticker for Bitcoin. And this was launched 5 years ago or so. I believe it's about 5 years ago, as one of the first proxies to own Bitcoin without owning it directly, which gave many investors, like big institutional investors, hedge funds, or individual retail investors through retirement or brokerage accounts. It gave them an opportunity to get exposed to Bitcoin without necessarily having to worry about the complexities of owning it, and again, what's called custodying it themselves. There's a reason I'm talking about this today. One is not only because it's an easy option for retirement accounts, etc., but there's also a potential opportunity moving here in the future with this particular investment vehicle. I do want to caveat, nothing in this video is financial advice. This is from my own research, my own knowledge, and actually something that I do personally. So I want to share it with everybody. Owning any type of investment, including Bitcoin, it can be very risky. You should always do your own research, seek your own advice from your personal professionals, and certainly not just do what I'm suggesting here. So one of the things about Grayscale Bitcoin Trust is that for many years, it traded at well, let's actually start with what it is. So Grayscale Bitcoin Trust was an influx of investor capital who then purchased Bitcoin. And so Grayscale, the company, took in money, they bought Bitcoin, and they pay a third-party custodian to hold that Bitcoin. And then the investors that own the shares of the trust inherently own a piece of the underlying Bitcoin that the trust owns. Again, the individual investor doesn't own the actual physical Bitcoin or the digital Bitcoin, but they own exposure through their ownership in the trust. And so for many years, there was actually a premium, and we'll talk about this when I pull up the next chart, where institutional investors could buy shares of Grayscale Bitcoin Trust on the private market. They could hold it for the lockout period. There's a lockout period for 6 months, basically for 6 months, at which point they could liquidate their holdings, and which becomes then tradable on the secondary market. And they could capture a trade premium between the price of Bitcoin and what the value of the Grayscale Bitcoin Trust shares were trading for. So they could hold it for 6 months and collect 10, 20, 30% premium on their trade. So I'm going to go ahead and pull that up so I can show that to you. I shall pull it up here. So on this chart, this goes back all the way to July 2017. You can see here, there is a 0% line. That means that if it were this 0% gray line, it means if the shares of Grayscale Bitcoin Trust were trading dollar for dollar against the NAV, or the value of the underlying Bitcoin, there'd be a 0% premium and there'd be a 0% discount, right? It would be directly proportional to the value of the underlying Bitcoin. Again, for many years, all the way from 2017, 2018, 2019, really until the beginning of, towards the middle of last year, middle of 2021, it traded at a premium. So again, these institutional investors could buy ownership of Grayscale Bitcoin Trust at on the private market for the fixed offering price, and then they could hold it for the 6-month lockout period, and then immediately sell it in the secondary market here, Fidelity, all these other exchanges and brokerages, and collect this premium because the shares of Grayscale Bitcoin Trust were trading for higher than the underlying Bitcoin. That changed in 2021. And here comes the opportunity, in my opinion, for us retail investors. So as you can see, it flipped right around March of 2021. And I'm going to pull up another chart that shows this a little more clearly. And since then, it's been trading at this increasing discount to NAV, which means if you buy Grayscale Bitcoin Trust shares, you are actually buying more exposure to Bitcoin than if you just bought Bitcoin itself. You're buying for dollar, you're buying more exposure for your dollars in a Grayscale Bitcoin Trust than you would be if you were just buying it directly. Let me pull up this other chart. So this only goes back to April 2021. So this shows the discount, only the discount, because it doesn't go back any further than this. We can actually flip it here. You can see that very clear switch right here. And this discount has been growing and growing and growing. And it's primarily because there's all that institutional money and hedge fund money has moved to other vehicles since this arbitrage opportunity is gone. But one very important thing to know is Grayscale, the company, is fighting tooth and nail with US regulators to convert this investment vehicle, which is currently a trust, into an ETF, a Bitcoin ETF. There are none that exist in the US today. They exist in Canada, but they don't exist in the US. And there's a whole bunch of reasons why people think that is. But it seems like an inevitability. Whether that's 6 months, whether that's 6 years, nobody knows. But this is a constant conversation with US regulators, the SEC, et cetera, on providing these relatively safe, low-cost vehicles like ETFs to investors. If Grayscale, the belief is, and my belief is this, if Grayscale successfully gets this trust converted to an ETF, what that means is that instead of trading like it currently does with a private offering to institutional investors and these lockup periods and the way that trusts are managed and the administrative fees of trusts, this does have a relatively high fee for owning shares of Grayscale Bitcoin Trust. But if it gets converted to a spot Bitcoin ETF, that means that traders are actually trading that a portion of that Bitcoin directly in an exchange traded fund, which is managed and regulated very much differently than this current trust is. If that happens, the belief is that this discount that currently exists around 30% will snap back to zero, because an exchange traded fund which settles on a daily basis will always track nearly perfectly to the net asset value, the underlying Bitcoin. There doesn't exist this opportunity for these big premiums and these big discounts because of the nature of an ETF. So if that happens, regardless of what the price of Bitcoin does, this premium could go from 30% to 0% almost overnight if that approval happens, which could be a huge arbitrage opportunity for a retail investor. Again, not without risk, no certainty that it actually happens, but the conversations are ongoing. There's a lot of companies that are fighting for these types of spot Bitcoin ETFs. This is not just a Grayscale issue. A lot of investment firms and financial services companies want to bring these investment vehicles to their customers. And again, this is just it's just an opportunity I see in the market. It's an easy way to own Bitcoin in a retirement account or brokerage account, paired with this potential opportunity, which may play out in some number of months or years. Something to consider. Again, not financial advice. Do your own research, but wanted to bring it to your attention just because of its ease of ownership and the potential upside. So let me know if you have any questions. Hopefully that was clear. If not, I can re-record this in a little bit more of a succinct way, or reach out if you want to talk about it directly. All right, have a nice day.